Hello traders, welcome to the weekly Forex Forecast. My name is Gabriel Ujimado and this is Trade Forex with Gabe. I'll be taking you up on the market setups and portfolio selections for August 12th through to August the 16th. So big apologies to all my subscribers. I've been away from recording my weekly analysis. Well, not like I took a break from trading though, but just from the weekly analysis recordings, as I always do on weekends. Anyway, I'm back to the screen and let's see what the market holds for us. One of the questions I had repeatedly from the past weeks was, Gabriel, what's happening on the market? Lots of crash. Well, in big summary, it's just what is called carry trade in the market, wherein traders borrow money from cheap currencies and use it to buy higher yielding currencies. And when this begins to unwind, you begin to see market capitulation, as we see, as in the case of Japanese yen, where lots of traders were borrowing the yen to buy into better yielding currencies such as the USDs and other world global currencies. Now, when the Japanese yen started hiking their interest rates, it's no longer profitable to hold on to those trades, and people began to sell off those assets. So just a big summary, you can read it up, it's all over the news, but I thought I should also include it here. So let's get into the business for the week. So starting off as always with the economic calendar, this week we're having one major interest rate decision affecting the NZD, and also we have CPI data on Wednesday. So these are very key, important piece of data everyone trading this week should be mindful of. On Tuesday, we will see Clement count change, and we have the core PPI data to affect the USD. And already I've shown you on Wednesday, we have big news, NZD, and core CPI data on Wednesday. Then on Thursday, we'll see employment rate change affecting Australian dollar, and we also see GDP month-in-month data affecting Great Britain pounds, and then the core retail sales, and unemployment claims affecting the USD. And on Friday, not so much to expect, but for the GBP, where we see retail sales month-in-month. Now, going on to the first indicator we use to do portfolio selection, which is the current strength meter, you will see from the previous week, we have Swiss franc, cooling off a bit, but still retaining a good position. Swiss franc and Japanese yen still retaining positions as the best bets to go long on into the week. So my biggest positive to negative net change is Japanese yen. Looking to go long on it. Swiss franc, Canadian dollar, not so good, although it made a real strong move there because of oil. We see it moving from negative 4.9 to 0.8, but I don't really consider it to be a very strong pair into this week. We have euro also still sustaining, and Australian dollar on the weak side, GBP, NZD, and USD. These I'm looking to sell, matching them up with the strongest pair. So onto the portfolio selection, my best pairs to look for good move on the Japanese yen, Swiss franc, euro, and gold. So on JPYs, I'm looking to go short on AUD JPY, Canadian dollar JPY, USD JPY, and GBP JPY. And on Swiss franc, looking to go short on AUD Swiss franc, CAD Swiss franc, GBP Swiss franc. And on euro, I'm looking to go short on Euro GBP and Euro AUD, whereas I'm looking to go long on gold. So let's go into the market itself. That's the chart, and I'll have to switch to the chart. So starting off as always with the dollar index. On the dollar index, notice how we've been tracking the dollar, and I'm one of those that was giving the opinion. I saw dollar still moving up, but then we began to see the massive sell-off as people began to unwind, their trades against the Japanese yen. So we saw the dollar crashing, and it's really got to the point we anticipated. That's the 102.66 level. Now with the CPI data, I expect price the USD to consolidate a bit until Wednesday, when we see that core piece of information coming out. Then we know the next trajectory. But as for the sell-off we began to see, that has already reached a very nice technical level, which we predicted. So I think it's time to, decluster the charts. Let's decluster this a bit. So because we have a new set of data coming in, and we will be able to tell where next we're headed on this. So dollar still has the potential to sell off into the future, but then let's wait to see how this plays out. Usually with massive sell-off, we will see this consolidation, because right now we see that the primary trend is a downtrend. So usually you see the sell-off, you get the correction, that's the bullish flag. Sell-off, you get the bullish flag, and I'm expecting that we will get another round of sell-off, even as people continue to, sell off the unwind their trades against the Japanese yen into the future. So going forward into the Australia Japanese pairs, we'll start off with AUD JPY. Let's go to AUD JPY. Now let's look at it on the biggest picture. Now you see how most pairs began to lose strength on Japanese yen, but for a long time we've seen how everyone was carrying trade, borrowing the Japanese yen to buy better yielding currency pairs. But as soon as the Japanese government, that's the BOJ, Bank of Japan, began to raise interest rates, notice how all pairs began to unwind and everything began to capitulate. Right now, we see those opportunities still having more potentials to the downside, and I'm not looking to go long on this pair. All I've been waiting to see is that price begins to, this is just a temporal rally, what I call correction, or what the market calls correction. So I cannot tell right now if this is already breaking. Usually I like to see a huge momentum breaking out of this channel. So what I like to do, I'll take off this channel at the meantime, and because there's still the potential that price will retest this upper bound, and I have two levels where I'm looking to go short on. If price retests this upper bound, let me give you the levels there. This is the 97.28, or break above it up to the 98.50. These are key areas I would like to short into the 95.05 level. So whatever strategy you're using, now this is when you do portfolio selections, you increase the odds in your favor. Not just using strategies blindly, but it's good to match up the strong currencies against the weak currencies, and this gives you a very good outlook into the direction you should be trading. So I'm looking for price to make a retest into the 97.28, and if it breaks this level into the 98.50, these are key areas I'll be looking to go short on. But traders, as I know, may like to go in on this immediately market opens up, and if you do this, that means you'll be looking to do cost averaging trading strategy, where you enter and you are trying to re-enter at the next key levels and average out those positions. Well, whatever strategy you have, for me right now, this trade has more potentials to the downside towards the 95.054 level. And if we see a break beyond that level, the next level is the 94.20 level. Next on the list is Canadian dollar, Japanese yen. Let's go into that pair. CAD JPY, there you are. So CAD JPY has similar setup, and you can see it's almost the same thing. When you go to the higher time frames, you will see how Japanese yen has made so much, what do you call it? A lot of people borrowed the Japanese yen, investing in other pairs. This cuts across many currencies, many economies. Japanese yen known to have even negative interest rates. So In this case, we're looking for further correction into the 108.80 or further extension into the 110.90. Now, if we take the Fibonacci retracement tool and we do some little bit of measurement to check the levels where we expect these corrections. Now, we're already within the 50% fib levels and approached almost to the 61.8 fib levels, but there is potential that this could go even further. So we have to be prepared for it. And as traders, you have to factor in all of those risks. So if we begin to see price go into this level, this will give us best risk to reward ratios to sell into the 104.84. So however you want to trade this, right about now, you will see what we see here is more like a double top pattern. So what anyone can look for a break. If price breaks this level, I'll give you the price level also. So whichever way you want to attack this market at the moment, you know, at least we've done a nice portfolio selection here. So this is textbook double top pattern. Now look at it. This is a double top pattern forming. So we're looking for the next leg of the double top pattern here. So if this fulfills the structure, the market structure, and we get a break below the 106.18, guys, you already know what to do. We're selling into the 104.81 level. So this is Canadian dollar, Japanese yen. Next on the list is USD, Japanese yen, USD, JPY. Now, what we see here in the daily time frame, you can see we already have a breaking structure from this channel, or a breakout away from this channel. So this is fantastic already for me. You already know, guys, once we see a breakout away from a channel, all we do is to get the target. So this is already where I anticipate price to get to. So let's give it our usual color. So, but being on the conservative, I've set out the 142.47 level as my key target area. So right about now, you see we've been able to retrace into the 23.6 Fibonacci level. I would like to see price retrace further into at least the 50. Well, we can start from the 38.2 towards the 50. If we get any retracement into this level, this would be fantastic area, guys, to look for selling, to look for those short positions. Okay, so take it down to H4 and you will see. So we have a similar scenario here. In a case in a case you would like to, maybe price doesn't get to that level, because it can happen, you know, price may not necessarily get to these levels. But again, you see that we're having those textbook setups here, which is the double top pattern. Look at that. So we have the first head, and look at the second head here. So if we get price breaking below this level, which is, let's get the exact price level around this level, 145.80. Now this presents us with an opportunity to go short on this into the 142.478 level. So USD JPY, I rather short than do nothing on this pair. Okay, and the last on JPY pairs is Great Britain pound against Japanese yen, GBP JPY. So let's look at it. Now again, if you look at it on the higher time frame, you will see the same structure, you know, the same massive market capitulation to the downside. Now look at that. So right now we have approached the 38.2 Fibonacci level. If we're able to make it up to the 50, even anything from here is fantastic. But if we're able to make it up to the 50 fib levels, this would be a fantastic place to look for short positions. Now, I also have price, you know, forming, traveling, or trading within a channel. So this is another fantastic setup. If we see price break away from this channel, then we're looking for a sell-off into the 183.01 level. Okay, and that's the last pair on the Japanese yen, GBP JPY. Now let's move over to the Swiss franc. The next is we'll be looking at is Australian dollar Swiss franc. AUD Swiss franc, just a moment, there you are. So AUD Swiss franc has also the same. We had Swiss franc gaining massive strength there, and you can see how the sell-off has been so far. So if we pull up the fib tool from the swing high to the swing low down here, we are already well above the 61.8 fib level. So any moment from now, we could begin to see that nice sell-off into the key level here, which I've identified as 0.5595. So if we get any further rally into the upper bound of this channel at market resumption, yeah, anything around this level, then this will also present us a good place to go short on. Now take a look at this. This is giving us a nice technical structure. So around this level, where the last high we saw here, just a moment, I will give it all to you. So somewhere around the 0.5752. If we see price rally into this level, this would be a good place to look for short positions, probably in this case into the lower bound of this channel. All right, don't forget this is a lot of pip movement. So this is a lot of pip movements, let's say about 71. And if we're able to break the channel, then we're looking at up to 159 pips. Okay. Now, next on the line is Canadian dollar, Swiss franc. Canadian dollar, Swiss franc. And here again, you see the same. So the primary trend here is a downtrend. So all we see right now is just a correction. You know, no matter how a market crashes, you know, market doesn't move in a straight line. We see the sell-off, and then we see the correction, and then comes the next sell-off, just like Elliott wave. So this is typical what we are seeing here. So right now I'm expecting price to, right now I'm expecting price to sell off into the 0.6200 level. Now be mindful that we could see further correction. You see how price, just look at this, notice how it's coincided with the past here also. So if price breaks above this level and makes a retest around the 0.6374 level, this would be a fantastic place to start looking for short. But this notwithstanding, throughout last week, you saw how price just consolidated within this range. Okay, so we could see a resumption of market and we begin to sell off into the first conservative level. That level will be somewhere around here, but ultimately I'm expecting price to sell off to the 0.6200 level. So put that in your factor the risk involved in this trade, because there is huge potential that we could make this correction up to 0.6374 level. Okay, Canadian dollar, Swiss franc. Next on the list and last for Swiss franc is GBP Swiss franc. Okay, GBP CHF. GBP Swiss franc. And on this trade, we're looking for further rally into the 50 or 61.8 Fibonacci levels. Okay, the 50 to 61 Fibonacci levels. Let's see how this plays out. Now, massive sell-off, and this is just a correction. And if we're to work with Fibonacci, anything within the 50, and you can see how price tested that really nicely. Okay, from the last swing high to the last swing low, as soon as it got to the 50 fib level, we started seeing the sell-off again. So when the market opens up, we just can wait and see what happens. But anything from the 61 level, this would be a good place. I would really like to go short on this space, as it presents a better risk to reward ratio into the profit taking region, which is the 1.09099 level. Okay, and that's GBP Swiss franc. So patience, 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 guys. Now that's the last one for Swiss franc pairs, and just two for euro, and we'll be starting with euro GBP. Euro GBP. Now on euro GBP, something interesting is happening here. Although euro is stronger than GBP, at the interim, I would like to go short on this pair, and when price achieves the profit target somewhere around here, then I would look to go long on it. Okay, you will notice that on the portfolio selection, I had it euro GBP short, whereas euro is stronger than GBP. Yes, this pair, this what do you call it? Looking at euro here and GBP is fairly stronger. So there is that potential based on technical analysis, that price will first respect the technical setup we see here, which is a break below the technical key level here. And you can see after the breakout, price has made a retest, and we're on our way down to the profit target for the failure in the structure here. So we had a new high, lower high, new higher high, and right now price has broken the last lower high. So what this simply means is that price will try to fulfill the technical structure trading outlook on this kind of break in swing, okay, or field swing. So to trade into the 0.8512, and anything from here, then will I look for to go long again on this pair back into this key level of 0.8617. So it's a tricky trade, but then you could you can watch it out. Just take a short stop loss there when you go short on this, okay? Because ultimately euro is stronger, so we actually expect euro to go to trade into 0.8617. But I'm really interested in this break in structure, trading it into this level and getting a better entry into the next high. And last on euro pair is euro AUD. Euro AUD, and I'm also looking to go short on this pair. Okay, I'm looking to go short on it. So I mean long rather, sorry. I'm looking to go long on this, and I think there's a little mistake I made on during the analysis. So guys, pardon me, this is supposed to be long, euro AUD long. So please do correct it. Okay, do correct it. Euro AUD, I'm looking to go long on it. So that's just more of a typo there, typo error. Okay, so if you look at the outlook, look at the bigger picture there. What we expect here, we had a really massive volatility shock here. Look, see how this played out. So I'm expecting price to further sell off into these key levels, 1.6415 or 1.6317. Then I'll look to go long on this pair. So it's not far-fetched. From here, it's about 188 pips, and further down, it's about 270. So we have huge potential to the upside. So for this trade, I would really like to wait to see price, make it further down before going in. And you can see it corresponds to the breakouts, the area of breakout from this channel. So I'll have to wait for that to play out before I try to go in on this. You see, huge potential to the upside. And last on the list for me is gold. So gold, I'm looking to go long on this pair. Gold, if you take a look at weekly time frame, based on geopolitical tensions we've been having, gold only presents an upside, and we've been smashing all-time highs on gold trades. So into the week, I'm expecting price, to make you see how we made really nice sell-off into the week, and recovery again. So that means there is huge potential to the upside. So if we get any correction at the start of the week, then this presents us a good entry to go long on this trade into the 2472 trade. Gold has huge potential for further to create new all-time highs. We were able to predict this 3 times price retested these key levels. If you've been following my analysis, we predicted that we're necessarily going to get a breakout from these key levels, and we got that. We got the retest. Price gold gave us an all-time high. So we have a similar situation playing out. We have a similar situation playing out as we are seeing, as we see price, let's use it on the daily time frame. So as we see a new channel creation here, we've been respecting the structure: new high, new lower high, new higher high, lower high, higher high, and new higher low. So price is just expected to create a new higher high at the upper boundary of this channel. So we'll see how that plays out. So traders, this is it. This is my outlook and portfolios I'll be looking to put my searchlights on to trade into the week. So I want to wish you all the best. Don't forget to factor in correlation analysis into your trades, and also do proper risk management as you trade. So until next week, this is it from my desk. Have a great day ahead. Have a great trading week ahead. Bye-bye.